private credit, the
And this is what people see, and this is what
partner with originators,
have
and we issue loans
software actually.
as EU debt
Also
instruments.
recording loans.
We have Isfeld, we work with NASDAQ, and
This is what I'll use this one.
we buy out basically loan portfolios, and then we give access to institutional investors through that. We tokenize the notes, so there's live transparency.
Take banner, thing
Yeah,
coming.
pretty cool.
Sounds good. I'm here to learn more about crypto-based lending and all of that, because we do conventional.
Yeah,
right?
exactly. Well, a lot of
Stay
people,
tuned.
when everybody's moving towards
That's right.
tokenization now because of all the benefits we have faster, it's transparent, more liquidity. So
That's true, yeah.
this is going to be a
Gotta
great
move with the
spot somewhere.
times.
Exactly. Yeah.
Nice meeting you,
Sounds good. It's
Karen.
great meeting you
Okay.
guys.
Nice meeting you.
Nice meeting you.
Hi,
I'm
Jarrod.
Jared. Nice to meet you.
Nice to meet you.
I'm
Deploy?
Nice to meet you.
We're a Stockholm-based startup.
We're live.
Runs infrastructure for
Yeah.
private credit.
Oh, excellent.
I just started like 2 weeks ago.
Oh,
When I
okay.
say it for
I'm
you,
still working remotely.
sit here for a second. I want to see how
I'm
it
still
looks.
processing to go out there,
Okay.
but I thought, might as well come here and build some relationships, see what
Yeah.
Toronto Tech Week's all about. I live down in
No, sit here. Just here.
Well, glad you're here.
Thank you. I was actually reading up on you last night.
Oh dear.
You'll have a big shoulder.
Yeah, I haven't updated that in a long time. So anyway, thank you.
Been,
You want the?
crazy. We're doing all this work in tokenization
Yeah.
and portal. See if you can
Injured.
I am
How did you get started?
covering those.
Oh, I just got off this guy.
How you doing? I'm Kieran.
Where are you based at? How do you pronounce it?
Yeah.
Usually I screen my calls.
Yeah.
When I was doing something
This
else,
is
I
what to
just
do.
picked up.
Part of the
So,
CTO.
They gave him a cold call.
Okay. Yeah.
Awesome.
What's your role? CTO.
It's awesome. And you're working for APX, right?
We own crypto.
Yeah.
Well, yeah, thanks for hosting.
Yeah,
It's
Here, how you can monetize.
I'm working with Deploy right now. We're a startup based in Stockholm.
Oh, it's autofocus.
And we're just building fundless infrastructure here for private credit. So we're issuing, so what we do is we partner with traditional lenders, traditional originators like Evergreen. I'm not sure if you know Evergreen Financial.
So we
or
don't
like
really
Ventures in the UK as well. We're partnering with a lot of different originators, and we're buying out own portfolios.
that.
And then we are issuing tokenized notes against these own portfolios and giving access to institutional investors and
You guys get
bridging
into
the
that
gap
as well.
between tokenization and private credit, bringing real-time transparency and live portfolio insights, live updates. And we're actually working on a secondary
You can't
market.
margin on it.
It's not just an OTC desk, we're working
Not
on
margin.
like
We'll put it
bringing real liquidity and
storage.
the private credit market, which we've never really done before, so
back with the bonus.
big sport.
Oh, that's great. Yeah.
We're not touching a Bitcoin.
Kind of see what's going on. We're planning on releasing it in like 60 days.
Okay.
Oh, well.
Team's working hard.
So how
I'm
do
not
you
working on that. I'm
make
more
money?
on the investor relations side, but
Spread
pretty crazy.
between what
So I was working in private credit last summer, but just traditionally.
Yeah.
And
Good here.
Sorry, okay, so you're
You
saying
just
been doing
so
crypto
you
since
borrow
2016.
money
the
at
comments
5
here
yeah.
sometimes
Um,
people just
I saw
Join the
Deploy
meeting
just like randomly.
and
flicked,
talk
and I was
next.
But it's
These guys are-
it's a lot of that
It's been crazy. So I just reached out to
a lot of
them.
that gap exists.
So I was pretty lucky for that.
Thank you,
The
sir.
lenders that we borrow from, they're not really
Yeah, I'm thinking the same thing.
Grab some water.
And out $5 million, $10 million.
Oh, it actually does?
Yes, there's
Oh,
so their
okay.
collateral is the Bitcoin.
What are you guys doing at APX there? You're
So we
So the
already,
maximum we go is 60%.
Nothing against Bitcoin.
Okay, 60K. It varies, so depends on how much you're borrowing.
So we
So it's the lowest we go
so we
is 1099. That's if you're borrowing $1 million. And then it's 1099 and 1114K.
all over EU.
So anything below.
So is the tech transferable? It's just the
1,000.
it's just regulations that have to change because there's different. Yeah.
But that's something that's actually like we used to.
Compliance is actually the biggest. I think the biggest part of
Canada.
all of this tokenization because institutions can't trust, can't invest without being.
In Canada, we launched our license in April.
It's a lot of work that I also.
We launched in Canada with $13.99. within a year, we can able to force liquidity and henceforth bring everyone down.
Lending fund or
Different lending facilities. Yeah. So it's like
I mean, it's important because tokenization is like,
third party.
it's so important. It's, you know, people move from
Banks,
your
they're still
physical
warming up
shares
to the
and
idea. I think we're
physical piece of paper,
Right.
physical stock certificates, so now, you know, it's all online. And I think the next wave is everyone's all moving on chain.
T plus 3 days,
Yeah.
T plus 3 seconds, right?
Exactly. Just
So
atomic
this is a
seven is so
private credit fund that you guys have.
was,
And so what is the
kind of baffled.
private,
How
what is the
people are
invest in a private credit fund?
moving quicker, but it really is just the regulations and the legal.
Private credit
compliance
fund lenders,
measures.
right? Like the person you get the money, you're lending at 10 points, 11 points. What's their net?
That's like whenever they're borrowing at, like whenever they're.
No, but what are you paying them?
We're paying them whatever the difference. So whatever we're borrowing at, we're paying them.
That's my question. What is the borrowing?
Depends from lender to lender.
So yeah, what's here in Canada? So,
So it's
'cause I know
not
the
one.
US right now is trying to pass the Clarity Act. Did they pass it in the States?
So it's
One of them I know, I think.
Because we're involved with private credit funds also. But like assets. This conversation, I'm not sure I would borrow at 11%. 11%.
I think that is. That's one.
Oh, okay. But I think what do I earn on the other side? Right,
I
so
mean, that's gonna be huge for the whole industry.
going rates at least 8%.
EU, where we operate in.
Or higher.
I'm
Curious.
the highest.
Clients there and regulatory standards. We have a Latvian SPV, which
Sure,
holds
just by the crypto.
all of our
Only the
assets.
And you have in cold storage.
It's pretty nice being in Europe because, you know, we're in Latvia, but
And so let's say,
all throughout Europe.
is it altcoins? Including alts? You guys are lending
So we're
it?
only.
Brexit and all that stuff.
Yeah.
But
Right now.
Okay.
And we've seen like primarily because it's in as a DeFi market, an access to the market. It's 90% of our
Alright, well, it's
loans.
nice meeting you guys.
90% of our loans are backed by Bitcoin. As I said, how much you can do with your Bitcoin.
So basically, way of getting leverage on this.
Yep.
So the challenge, you know, someone, if you have $1 million of Bitcoin, you know, the two ways of making money on that. Your example, you're paying 10 points and you're lending or you're using it for something else. Or you buy an ETF and you take margin on it. And you're only paying prime, which is 4.5. Right. So how big is the loan book?
We've crossed 15 million at this
In
point.
Canada, 15 million in the US?
In combined, and in the
Oh,
US.
so it's fairly new, only $15 million.
Yep. So we've been around 2024. Well, 2023. 2024 we started deploying loans. And now we're ramping up. So what we're doing is we're not. So we have two verticals that we work. One is direct to consumer lending that we. And then we're also licensing our tech so that other changes that want to offer a similar product to their users, they can build on top of what we have.
Right.
So we're going live Europe
Okay.
with a partner. We're already live in the US as Apex and then as another entity as well.
Sure. White labeling the software.
Exactly. So we're white labeling it in Canada as well. So in Canada, one of the exchanges is not lending on it, but it's going to be powered by Apex.
Sure. That makes more sense.
We're sort of taking them through a dual pronged approach.
Because once you already
And
have
seeing-
the Bitcoin in your custody, it's much easier to monetize it. Because otherwise now, if I have it in an exchange, I have to move it to your account, your cold wallet.
the process becomes operationally it's much simpler. Exactly. But it all depends on who's providing liquidity because if the exchange doesn't have the funds to provide loans, the exchange is borrowing funds from, let's say, third party, then you do have to use collateral. To a wallet that is sort of shared access with whoever's providing liquidity.
Of course.
Yeah,
How many people are?
We're about 10 people now.
And all basically.
We're spread out. So we've got most of the team is in North America.
So what's Andrei's background? How did he start?
So Andrei comes from, so he started Coinbetting, which was the first licensed crypto brokerage. And Coinbase was acquired by Wonderfy back in
Being bought by Robin.
Exactly. So that all happened in 2022, and then 2022. So I was one of the first employees at Coinbase. Lending was one of the things we always wanted to do. Honestly, struggle with it. Trading and lending on the same platform.
Right.
Like how do you stop someone from just borrowing, buying? So it's just one of those things that the regulators were just not comfortable enabling on the. At the end of it, it's leverage trading essentially.
Right.
The one required and we're no longer associated with
Get a
Coinbase.
snack or water or
Yeah,
something.
it sort of made sense to, no one sort of picked up on this yet.
There's no one stopping them from doing what you're
I
suggesting.
went for water and
I mean,
then
regulators
got
are-
distracted, but you can get water. So
You just leveraging on.
Yes, they can do it themselves. Exactly. Like you can take it off the exchange, go to like Apex. Right? You can buy Bitcoin on the exchange, go to Apex, borrow against it, take the cash, go back to the exchange, buy more Bitcoin. Like there's no one stopping them from doing that, but the regulators' angle is there needs to be at least some barriers in place so that it discourages people from doing it excessively. Like they know like people are gonna do it.
Right.
yeah, but
Either way, and that's something we track as well on our platform. Like we ask people,
when the
a lot of
event
people
starts,
say
effectively, I don't know.
that
We're just gonna take that.
use of funds is to reinvest in digital assets.
Right.
So we know people are.
Right now, I put an overlay, so you can go media.
Is it a,
You can go media.
how does it, is it an interest
So if
only
you scroll
loan?
down
Is
somewhere
it
there.
a-
So we offer only.
It's the image here.
So
Click
it's
this
interest
image.
only. We also do returns, so
Take it
amortize.
off.
Okay.
So click again
And
the
then
image.
we also do deferred. So
So we're just
You
put
don't
a
pay
placeholder
anything
right now and just say starting soon.
lifetime of the loan, on maturity, we collect interest lump sum
When
and
they'll come.
principal back.
We just remove that.
So we
You have some music.
offer all of that.
I can't find the.
So exactly. We're not compounding it. In the deferred, we're not compounding it. It's still simple interest, but the interest rate is higher. We don't compound it, but it's 5 basis points.
I think-
or 0.5 higher. And then we've seen like we recently launched last quarter. We've seen like since the last quarter the loan
You can see
applications
the
that's come
preview
in
on your
about
screen on the stage.
about 50% of them
Letting the
do
user.
opt for the deferred payment option.
Of course.
It just makes sense.
Yeah, well, they're just they're doubling down. They don't have the cash flow to pay the here. They're gonna have to sell the asset to pay off the loan.
So that we offer that as well. Like a lot of people are like, I don't want to worry about
Wanna go get water?
portion of my collateral to make my monthly payments.
Yeah, it gets into a slippery slope.
Yeah.
Let's just start at another 5 minutes.
Nice to meet you. ATX, tell me a little bit about you.
I'm the CTO at ATAC.
Hi, good. I'm confused. I don't see anything.
I'm not behind this presentation, but Andrei is my co-founder.
But I thought I approved that in an email. You said
What do
thanks.
you want to know about ATAC?
Just what the company's all about. I don't know.
Okay.
I'm a lender, I'm
Right.
a business.
Oh, okay.
Some of it- Yeah, so I
Yeah.
wanted to rewrite down your name.
Makes sense. That's fine.
Please introduce yourself.
Actually, yeah.
Yeah.
Yeah, George Rosa is our CEO.
Right.
Yes,
Okay.
so, you know,
You're sending it to
thank you
TD,
for the
right?
opportunity.
Okay. That's fine. Thank you.
I bank with you guys, so I'm well aware of.
Yeah.
Oh, yeah.
I'm a business lead.
It's
So,
probably,
Okay.
they don't have people. I personally.
Right.
For those that.
Okay. Okay. Yeah, we're usually in touch with Arlie, Thomas.
yeah, back.
Yeah.
Wire transfer.
Exactly.
Kind of thing.
Exactly, because that's who we're in. Wires, wires. Yeah, so we offer. So there's the same as. Learn as a platform. And people value that will up to 6%. Let's say it's a Bitcoin that's worth $1,000.
It's just I would realize that, especially when you have liabilities. I both it's like yeah, because you just miss out on the sure. Yeah, we're raised to the bottom of transparency. We got a good client.
You know, I, as a lender, I don't get involved.
Right.
Doesn't ask decision. Shouldn't be the default.
Because I'm very so
Right.
when this came out, and the fact that they started to be very, entrepreneurial,
Right.
as you know, so, he went one day, wow.
We've been on his case. We're trying to push him.
No comments, no nothing.
Yes.
In that regard, by our banking partner as well. But yeah, it's one of those things where it's like everyone at this point has heard of Bitcoin. Everyone's heard of it. And sort of volatile and the hype cycle.
We just have the first one.
All of those angles.
The first slide.
A lot of people know what to actually do. All I've heard is Bitcoin people.
Yeah, no, it's not changed yet.
Exactly, like it's not thinking it's risky because
Which one is it? Is it open?
Yeah.
real, but
Yeah, that's the one. It's fine, just leave it.
more and more, and then as sort of more younger generation sort of gets into the financial system, you're gonna see more and more assets being part of their portfolio. That's what they sort of interacted with the first time they got into the financial system. They didn't have access to, don't have access to someone with history or someone with a professional sort of history. Like the sort of financial instruments that you have access to. The professional student does not have access to the
In the
same
backstage, just see themselves.
facilities. So a lot of kids would just put $2 into Bitcoin, $3 into another digital asset. And now suddenly, the $50 that they put in Bitcoin is worth $1,000. That will be your mind. You're like, should I sell it? Do I hold on to it? So, any appreciating asset like stocks. You invest in stocks to hold on to them, not to wait down. Exactly.
Yeah, that's right. Yeah.
Like everyone's most sort of mature investors are always long.
That's right. That's the thing. And I think probably the older generation.
We could work.
How to end it?
But that's the thing, like it's when Bitcoin.
That's the huge thing about photography. Like you have to get after
Right,
that.
but
If you buy Fujifilm, that's for street photo.
that was fairly new.
So it's becoming more mainstream now. That's the thing.
It is. I was saying to Ed,
Right.
I mean, he didn't have a choice.
Yeah.
Right? I don't know how to do that.
That's the other thing, like the biggest pains I also supposed to solve was payments. Transactions where walk down by sending wires, wires, or other videos sending funds to the US. And US and Canada, we get spoiled by how mature the technology is. Financial systems are where you have multiple ways of sending payments.
Let's say that's innovation.
Now it's ended in Africa. Like, that's where the problem starts. And again, for us as Canadians, sending funds anywhere, but let's say someone from East Asia has fund someone in Africa. At micro level,
Because it's dark.
it's very advanced.
What?
And then once we're
As soon as you get to cross border,
I don't know that it'll be that
white one.
huge barriers.
For now, so it stands up.
People working remotely. Going off places. Asia. Oh, that's just awesome. But we can still work for our North Americans. But I still want to get paid. When I get paid,
Why not?
I don't have a bank account and
I have rights. I have.
Yeah. You have my juga. That's perfect.
I can because you have a temporary work permit, but it doesn't. A lot of it's
Yes.
again it's coming down. But most of the
You can
cases,
add-
like a lot of
You
people,
don't that, but you can add.
like
So like one is instead of it's like television.
But I have
Plenty of
kind
cameras
of
in
a credit card that I can just load up with.
They track cards.
Doing what?
Exactly.
It's like the
Exactly, I
people in
can just
our
load up
type of
with.
software that people use. You know Tony Robbins?
And my funds, it just takes it out of my Bitcoin.
Public speaker. He has like
That's an
million
example.
people.
But
So he has like, but he has 100 people when they have a webinar. He has 1 million people that are getting work from all over the world. And they monitor
now, start all this. You may have $100 in assets, but it's all locked up. Sounds like question.
how the government in Canada looks at it.
This is where you have more investments.
That's good.
Yeah. This is where Charles comes in. Where it's like, we value your Bitcoin enough that we're willing to lend you against it. Bitcoin as collateral. We think valuable enough collateral. We would be able to borrow against it, just like a car would be or a house would be. It's great. So,
Silly question.
yeah.
Say the credit union decided, you know, we're going to. Are we allowed to as a credit union because of the regulators?
So you hold it with qualified custodians. So now there's custodians, so similar to how traditional sort of bank vault works. Crypto, you've got so it's qualified custodians taking custody of your Bitcoin. So there are a few of them that exist sort of in North America. They're qualified by the regulators to hold on to crypto, are insured up to 250 million. So if you hold, let's say, $250 million Bitcoin with a qualified custodian, it is insured up to 5 million in terms of default, whatever. So you hold it with them. So the users, let's say borrowers, would deposit Bitcoin, send you their Bitcoin, put it with qualified custodian, and then you have access to the accounts with the qualified custodians. Then you lend funds, and the funds are sitting in that vault for the entirety of the loan. When the loan matures, and the loan is paid back, whether on maturity or if someone wants to close the loan early, pay it back. And then right. It all depends. It all depends on sort of. So us, for instance, we're not lending our own funds. If you were to come to us with, hey, here's a Bitcoin, can I get a loan against it? The loan that we're giving you is not our own funds. We have borrowed loans from again, a third-party vendor, like a fund, like private equity, that have given us, let's say, $5 million to invest.
Real currency.
Exactly, $5 million, Canadian dollars, to lend out, because they don't have a mechanism to do microloans. So for instance, they don't have the mechanism to do $1,000 loans. They deal with, we'll do $5 million, and then we'll do $10 million. So we'll do these big tranches rather than microloans. That's where we come in with our technology. That 5 million can be given to 1,000 people. Exactly. Whoever wants to. Someone comes in, someone wants to borrow $10,000 or 100,000, 45,000. We're able to do that at scale very quickly,
as a hobby.
with minimal sort of human intervention. So that's how. So we borrow from them at 9%. And we lend it out at 10%.
We're gonna get started in about 2 minutes.
Yes, they go to our app apexlending.com.
Before
Create an account. Application.
actually my
Within 5 minutes, you can get to a point where now you can send your collateral. And again, by banking hours of deployments, but within 24 hours, everyone gets it. Actually,
So very now.
It could have been. It could have been people getting the loan and then depositing them.
Yeah, for sure.
Yeah, sure, yeah, that's awesome.
Yeah, like just
This is where
I'm just gonna be
Sure, yeah. Sounds good, nice.
Yeah,
this is where we start.
it's better if you talk to someone. I think we can
Awesome, yeah, that's perfect. Sounds good, yeah.
Some people
you from the world, right? I heard it's a long way.
Yeah.
What time did you get there?
Well, I'm not from Niagara on the lake too. That's down close to Niagara Falls. I just took the boat train this morning. I go to school in Guelph, but it's in the summer.
That's what you're doing. Because, yeah, we are, we're responsible. It's all about
I live in, I'm working with my so I work at home. But this week I'm running a lot for the next month. Holiday season. Yeah, go back to school.
listed on the ground.
$2 adding more hours.
2 hours.
It's tough, but the main one is,
So where are you with the
once they everyone needs last time I think it's tough, especially the first and second one. And it's everything's there.
I used to have
I just convert that job.
super early classes.
Yeah, all of it will be in the background.
So good.
So is it, I guess the
I try to keep I'm genuinely trying to around the world space because still is. And all that money that has to be ready for tomorrow's.
So how much more action?
Yeah, well,
So I think there's probably trillions of dollars that arguably idle. And you leave it idle because it takes too much time to buy. On-chain repos, on-chain everything. So then a lot of treasury management sign in the morning. We have executed their
more transparent. Problems happen, and then a month later, you're like, it's just how it is.
And you go, oh, how'd you do that? I would love to talk to
The statement says, you have this money with
either way, CDIC. It's TD Bank or like, yep, $100 million. And you're worried about
Yes.
coverage. That's why it's very interesting to do. No. It's nice balance.
They use it. He has a clear angle. It's not good.
There he is. I might, as a trigger, because questions I can't answer. Straight to you. Yeah.
we begin? Do I have the okay to begin? Good morning, everybody. I was going to say good afternoon. Good morning, everybody. Very happy to see you all here. I wanted to start off by thanking our partners here at DLA for co-hosting with us this wonderful event for Toronto Tech Week, where we'll be talking about all things crypto lending and crypto credit related, and hopefully have a really informative discussion, fun discussion. And I welcome you to ask questions. Maybe keep your questions to the end of the panel and the fireside chat, but feel free to participate so we can make this a lively interaction. So we will have, I'm just going to go through a bit of housekeeping and then we'll start with Jarrod here. So we are going to have a panel right now with Jarrod and myself until 10:15, I believe. Then there's going to be a break, and then we are going to have a fireside chat together with Jarrod, with Matthew from Netcoins, and with Jamie Leverton from Reserve One. So that will be a brief discussion as well. And we'll be talking a bit more broader scope of crypto, capital markets, and involving trading platforms and lending platforms such as APX lending. So my name is Andrei. I am the CEO and founder of Apex Lending, or APX Lending. We like to pronounce it as Apex Lending. Unfortunately, apexlending.com was taken, so we had to go with APX, but we still pronounce it as Apex. I've been in this industry, in the crypto industry, for almost 10 years at this point in time. I used to run a company called Coinberry, which I launched in 2017, which became the first crypto trading platform to receive regulatory, or to become regulated in Canada back in 2020 at this point in time. I've had the fortune of working with Jarrod and Russ there in the back, two great partners from DLA Piper, for I think the vast majority of those 10 years, and they've helped me build these Canadian homegrown regulated crypto businesses and really help push the industry forward in Canada, which I'm super excited to do. I want to thank my team here. If I could just have my team members stand up just so people know who we are. So we have Taha over here, who is our wonderful CTO at Apex. We have Rio over there that helped organize this entire event, and round of applause for Rio. There's a lot of work on that. Manuel here somewhere as well. There's Manuel. And we'll have some more people showing up throughout the day as well. So without further ado, I want to introduce Jarrod.
I'm Jarrod Isfeld. I'm a partner in DLA Securities and Financial Services Regulatory Group. I've been working in the crypto space really since it became an area of regulatory practice in Canada. So many years. I primarily work with fintech and crypto companies to help them navigate the Canadian regulatory regime. And sometimes we're lucky enough to do novel relief like we did for Coinberry and more recently Apex. And sometimes that's structuring the business to get the right regulatory outcome. Happy to be here today, and hopefully we can lend a little bit of insight from our experience in the crypto regulatory space, in particular where it intersects with lending.
Amazing. Lending insight for a lending business. There you go. So I think something that's really interesting that you just mentioned is Canadian regulators, working with Canadian regulators. If we take a look at what's happened in the crypto lending industry globally, really, obviously everybody is well aware of Celsius, is the BlockFis of the world, that the failures of
2022,
2022, the FTXs, more recently BlockFills. Yeah. Beginning of this year, and those are all centralized businesses. But also we keep hearing about protocol failures. We recently had the Aave sort of fiasco. If I'm not mistaken, something around 200 million got locked up in bad collateral. So when we talk about regulation, we talk about trust. And so I wanted to ask you your opinion. Insofar as trust is concerned, and when borrowers and institutional retail borrowers are looking for, the regulatory sort of stamp of approval, what does trust actually mean to you as a securities, as a crypto lawyer, insofar as regulatory oversight of crypto businesses and crypto lending businesses specifically?
Well, I mean, I think that's the answer right there. You can have a brand name, you can have code audits, you can have a lot of momentum in finding investors. I mean, just look at FTX. But if you're not regulated, I mean, there's been no sort of trusted third party who's looked under the hood at what the business is doing. Is the disclosure accurate? Does the disclosure, say what you think it says? I mean, when we either get registered or apply for regulatory relief, especially in the lending space, the regulators take a deep dive under the hood. They look at your loan agreements, they look at your policies and procedures, they make sure you have a business continuity plan. They insist that you have conflicts policies that are commensurate with the conflicts that a registered dealer or advisor under 31103 have to have. They make sure that segregation is true segregation and that your custodian is qualified and has their SOC do audits. And, they when you issue a press release, they vet it and make sure that, if you say something that they don't like, you're going to get a call from the regulator saying, well, why did you say this in your press release? Is it true? So if you're unregulated, I mean, you don't need any of that. You don't need a conflicts policy. You don't need business continuity plans. And if you are a counterparty, whether you are an institutional lender or whether you are a borrower, I mean, what are your protections? You've got the loan agreement, and hopefully that loan agreement is in a jurisdiction that you can sue or take action in, and it's not offshore. And so, yeah, for me, the other thing is it's not just, you go in, you apply for exemptive relief or for registration, whatever it is, and it's done. There's continuous oversight. So, I mean, Andrei, Apex has got to report to the commissions on a regular basis. You better believe if there is a significant event in the crypto market generally, Apex is getting a call from the commission saying, are your LTV ratios still working? How does this impact you? So, I mean, to me, it's kind of night and day. From a trust perspective, a regulated entity versus a regulated entity. I mean, doesn't necessarily mean that a company wouldn't act with the same level of rigor and have the same policies if they're not regulated, but you don't know. So that's kind of my perspective.
Yeah, and I think, from our, getting those phone calls is definitely always a, jolt in the middle of the night. Thank God it hasn't happened in the middle of the night. But we do have, we do get calls from the emails from the OSC, I would say, after, market movement, market events like that. And it's good to see that, they have a sort of a check on the pulse on a continuous basis. One thing that you and I have discussed at length is regulation is good. I don't think anybody's going to argue that, within sort of reasonable limits, right? But lending as a business has been around for a very, very long time. And lending in Canada is generally not regulated by securities law. And I remember when we announced our exemptive relief last year, I actually got a bit of heat on LinkedIn, and various lawyers around Canada had a different opinion on whether securities law applied at all and why we went this route. And so I think, and this is something that comes up every once in a while. Like I get this question of like, why? Funny enough, even from the industry, from some of our competitors in the industry, wondering why we went this route. So maybe you can share with the audience here, why did we go through the Securities Commission at all?
Yeah, well, we're going to run out of time on that one. Yeah, I get the same feedback. So I'll try to be brief, but one of the things, and I don't mean to be pedantic, and I apologize if I'm just telling people things they already know, but it's important to understand that Canadian securities regulations are policy-based. They're broadly drafted. And what that means is the commissions can sort of take jurisdiction when they feel there's a need to, broadly speaking. And they felt the need to, when we got exemptive relief for crypto asset trading platforms, and they felt the need to in lending. The trouble is, how do you get there? Because, I mean, you'd think if you lend somebody money, you're not issuing them a security. You'd think it'd be the other way around, and you'd be right, except in crypto. And so what the regulators said was that because the lender is taking a crypto asset as collateral and has control over that crypto asset, ongoing monitoring that asset on an ongoing basis, has the ability to liquidate it, so control. That might be, they never said it is, but they said it, they said it's a crypto contract, effectively, which is a concept they came up with when they determined all their guidance around CTPs. And it's kind of a nebulous and broad concept. So they said because a crypto contract is created, there may be a security. They've never on the record said that there is a security, but they said there may. And then they also said that because these crypto contracts are being created regularly, and there's fees associated, and there's frequency in these lending transactions, that there may be dealing. So then the question is, okay, so you've got potential prospectus issues, and you've got potential dealing issues. How do you deal with that? So do you issue an OM to get around the prospectus requirement? Well, how can you? What would that say? I'm offering you an obligation to return your collateral. Doesn't make sense. On the dealing side, okay, do we get registered as a dealer? And we went through this with the regulators, and that doesn't make sense either, because how do you do KYC, KYP, suitability in the context of lending somebody cash, right? None of the policies that work or that are typically have to get undertaken by dealers really fit here. So the only solution was exemptive relief. The regulators were clear that they did want to take jurisdiction. One of the reasons they wanted to take jurisdiction is they look at lending as part of the broader crypto asset trading ecosystem. They see it all as interrelated. For example, they don't want the proceeds of your loan to be used to buy more crypto. So, in Canada, I think there are only 4 provinces that require you to get licensed to lend people money. And it's not particularly difficult to get those licenses, and the regulatory regimes aren't particularly robust. So the regulators looked at this and said, there's a gap. We've got broad scope to apply this crypto contract concept. We're going to take jurisdiction. And, were the regulators right? I don't know if any of them are here, but it's pretty debatable. But that's where we're at. Is that?
Yeah, I mean, I think from our perspective, and like obviously you were party to those discussions. We questioned the approach the regulators took early on quite a bit, and we've been pushed back. But fundamentally, I think from my perspective, the value, and again, keeping in mind that this is pertinent to a nascent industry, an industry where there are, continuously, and especially in the past, big blow-ups that took place, where trust was eroded, especially trust in crypto lending or crypto-backed lending businesses globally was eroded. And we saw value in working with the regulators, notwithstanding that perhaps we didn't see eye to eye 100% of sort of their perspective, but we did see value in working with them and putting in place all of the requirements that they had demanded of us. And fundamentally, all of those requirements were for the betterment of protection. I can say that with absolute certainty. Everything that they requested us to do was first and foremost to the benefit of the borrower. And so to me, yes, it was a lengthy process. It took us about 2 years. It was a very expensive, process. I think Jarrod probably now owns not one, but maybe 2 Lambos. It was a very valuable, I think, exercise, and it helped really push the industry forward. Again, with one of the most robust within one of the most robust regulatory regimes in the world insofar as securities are concerned. Canadian regulators have a really strong global brand. And so for us to be able to build a viable business, within this regime, really elevates not just the Canadian crypto industry, but the global crypto-backed lending industry as a whole. And now we're able to go out as a Canadian business. And so for those of you that maybe don't know, we have two verticals to the business at Apex Lending. We have our primary vertical, which is our regulated lending business. So we lend to within Canada and the US. We lend against Bitcoin and Ethereum. This collateral is custodied with qualified custodians. It's not rehypothecated. It's not reinvested. It's in cold storage. And what's very unique to our business, it's also visible to the borrower for the duration of the loan. So it sits in segregated cold storage custody. And so we don't need to wait for quarterly or biannual audits to see your collateral and to make sure that it's actually there. You can see it on chain 24/7. So it's a very unique concept that we built out, and which again gave the regulators that comfort because they can also check and make sure the collateral is not being reinvested or moved around or rehypothecated. So at the end of the day, the number one risk as a borrower when you're taking out an over-collateralized loan, when you're giving up more collateral than the loan you're getting, is that you lose your collateral, right? Because that's the main risk really that you're concerned with. And so I think I would say 90% of our focus, putting together the whole business structure was how do we address that risk? And again, cold storage, insured cold storage, segregated cold storage, and visible, transparent cold storage is how we, address some of those risks. So through that work with the regulators, we ended up building out a very, very robust business model that protects the borrower. And so, again, going back to sort of my original question, we decided to work with the regulators, not against them, and not fight them and court or not leave the country, but stay in the country and build together with them. And I think we did a pretty good job. It wasn't an easy process. It was a very long process, a lot of education. Again, when we were the first company to do this, so a lot of education, a lot of back and forth, figuring things out that have never been done before, addressing questions that nobody had to address before that came through from the regulators. So, but it was very exciting as a process, and we're very excited to keep innovating. And this is just the first step in what a a crypto-backed lending business could look like. Right now it is Bitcoin, Ethereum backed loans, and loans in Canadian dollars and USDC. But we are working on very cool and innovative products that we'll launch very soon, and you'll see those online. So we keep pushing forward. We keep working with the regulators to advance things. And so going back to sort of our first, I remember when we came into, actually probably Russ remembers this, when we first came and talked with the OSC when we launched Coinberry. This was back in 2017 when they didn't know much about crypto at all. And I remember they must have gathered like 20 or 25 lawyers, and it was me, Russ, and one of our CCO from Coinberry. And it really was just an educational chat at first. And so I feel like with Apex, it was kind of the same thing. But I'm very curious to hear your opinion, Jarrod. So you've seen the industry evolve, and you've seen the regulatory frameworks evolve. So from sort of the first wave of CTPs getting regulated in Canada to now, let's call it the second wave of lending businesses getting regulated. What have you seen in terms of if anything, of a different approach from the regulators, or a different perspective, or have they become, more lax, less lax, more responsive, less like what have you seen from your perspective insofar as regulators in Canada are concerned?
Yeah, it's a good one. I mean, think first, I think it's important to note that I drive a 2020 Volvo. And so, but I mean, yeah, Andrei's right. Back in 2017, it was all new. And regulators were trying to figure out, okay, do we take regulatory authority over this space? How do we do it? Do we differentiate between cryptocurrencies that are securities and those that are not? And it was really all about safely purchasing securities through platforms. And that's something that the regulators were familiar with. What they weren't familiar with is what is a cryptocurrency, right? And all the regulatory sort of consideration, once they figured out what they were, how they worked, then the regulatory considerations fell into place. So, how do you protect investors? You limit the amount a small investor can buy over a period of time. You ensure that you have disclosure on what the product is. Blah, blah, blah. And so, it could have gone a couple of ways. They could have, become more and more comfortable. When I say they, I mean the regulators more and more comfortable with the crypto space and sort of had more fulsome, what's the word I'm looking for? Rules that weren't time limited. So they could have put in place a more solid regime rather than, individual exemptive relief orders for each company. But then there was volatility in the crypto market. The regulators determined, we got to double down on regulation here. This is something that needs strong regulatory oversight. So, they haven't changed. I'll talk about what's changed, but what hasn't changed is sort of the regulators' approach to, we've got to regulate this, we've got to figure it out, and we've got to provide sort of bespoke solutions to each new business model. And, you contrast that with the US, which at the time,
we're still trying to think. I think when I was thinking in all of that diving that they did, all educating, all building out that we did to address their concerns, we really ended up with world-class technology And so I was mentioning earlier the two verticals to the business, one of them being the lending business. The second vertical we have is actually white. So we actually license out our technology to lenders globally. We have lenders, regulated lenders in Europe that are using us, in the US, and so it really, that work with the regulators and all of their deep dive, and all of their pushbacks, and really, you know, to your point, making sure that, you know, it's not just the disclosures or the risk statements that are coherent, but really that the business setup itself is viable. We allowed us to build world-class tech that we're licensed out, which is really exciting. I think it's exciting in general for Canada to be able to do that. Nascent, innovative, quick moving industry, we're able to export our technology globally. So if anybody hears from to build in Canada, it's pretty low. Anyway. So do you have any questions for me, Jerry, before I open it up?
In front of an audience.
That way we know it's authentic.
Yeah. So where do you, so, I mean, what do you, I know you're probably gonna ask this question right back at me, but what do you see as sort of the next steps for the lending industry? So we've got rules now, right? And you know, we know what we can do, or you can do, Apex can do. But when we first got exemptive relief, because we were the first and we had to educate the regulators on how the business works, and they had to go across the country to get approvals from all the other commissions, they were, you know, a lot of the flexibility that we tried to work into the order, they said, whoa. Let's just take this one step at a time. Let's just get this through and then come back to us and we'll let you do all this other stuff, which we're gonna hold them to. You know, what is that other stuff? Or are you giving up sort of your, give up your business plan?
Yeah, strategy. No, I mean, look, I think the reality is things are moving very quickly south of the border. The crypto industry, for better or for worse, got a sort of a stamp of approval from the from the US government. And so things are moving very, very fast. And like from a vantage point, I can see how the Canadian, like as a Canadian industry, we are starting to lag behind. I mean, we had some phenomenal, projects that were launched in Canada, Ethereum, finance, originally very, very early days. And now nobody really stayed in Canada from the big projects. And I think that's a big loss. It's a big problem, I think, for for our industry. And the reality is things are moving very fast south of the border. And so, we're looking at access to DeFi that's happening there. I mean, obviously, we are a centralized lender. We're a centralized regulated lender, meaning that when you borrow, you're borrowing from us as an entity, and then we work with funds to source the credit that we then lend out to our borrowers. But of course, DeFi as an innovative way to match borrowers and lenders without any intermediaries is a really exciting frontier. Now, how do you take DeFi as a technology and put it within a compliant wrapper? That's the $1 million question. And that's, I think, something that we probably be start looking at answering as well. But again, within this sort of understanding that borrower protection and borrower collateral protection is the number one concern. And so far, we see problems with DeFi protocols, at least in the way they function. And the regulators see problems. That's sort of the reality of it. So, it's working together again in answering those questions. We really, that's where the innovation comes in. But really, it's to within lending is to give people access to more big a variety of products, whether it's collateral or loan proceeds, at the best rates possible and the highest flexibility. that's, that's really, it's not a hard concept, it's the execution.
Yeah.
That's the hard part. So we're really excited. We're, we keep, we are really excited in what's to come. I think the tailwinds in the US have helped a little bit here. I think the regulators have even, to a certain extent, the government has, understood that something needs to be done. And so that's helped. And we hope to continue to push things forward and really bring them, at least bring new ideas to the table and see how many we get across the finish line.
Thanks.
All right. So that brings us to the end of the panel session. I think we are on time. We are very much so on time. Any questions for Jarrod or for myself? Yes, Dorothy.
You mentioned earlier that when you give a loan, it's not to buy more Bitcoin. How did the regulators get comfort with that as a use of loan proceeds?
I can address that. So I think not to buy more Bitcoin was maybe a bit of a.
I said they don't like that to happen, so we had some back and forth with them on it, and they've already bought the Bitcoin.
Yeah.
There, like, so who are we? We had this debate with the commissions, right? Who are we to say what people do with their money? I mean, there's a lot more dangerous things with Bitcoin they can, put their money into. I mean, and I think where we landed was as part of account appropriateness, which is not KYC. It's just a much lower standard. We'd just ask the question of what are they spending it on.
And I guess a follow on, do you see the market evolving to having margin accounts on Bitcoin as the next step now that you can do a loan on Bitcoin?
Yeah, I mean, look, I think that's I think the regulator's primary concern is leverage trading, is margin trading on Bitcoin. I think they're just afraid people are going to blow up their positions. Arguably, I'm sure that's the regulators' really mandate to tell people how to use their loan proceeds again, whether it's wrapped in a margin account or you have to go through somebody like Apex and then take those funds back to an exchange. But yeah, I mean, I mean, eventually, right? We have margin trading on regulated stock exchanges. So eventually, but I think we're probably still a bit ways off.
Well, I have a different take on offering leverage margin on the lending business here, because it's not like your margin account with your broker, where it becomes a personal liability, right? If you go under, and you get what you call liquidity cascade. Here the collateral is just the security is just the collateral. Nobody's going after your house. There's no personal liability. So I think it's problematic for the regulators to look at leverage here the same way they look at leverage more generally. And I'm trying to get that point across.
Any other questions?
Regulatory, what are the differences between obtaining US approval and Canadian approval regulatory? Because you've expanded to the US, I believe, right? So is there some significant delta between the approach that they view the product?
So remember when I was saying, you wouldn't think lending somebody money would be issuing a security? Well, that's exactly what the American regulators think. So they don't see this as an issuance of security. It's just in Canada. So you don't have to worry about securities regulation in the US to do the lending business. But there are other.
Yeah.
There are other regulatory regimes in the US you have to deal with on a state by state.
Honestly, yeah. So basically, it's kind of like in Canada, you have province by province or state by state lending licenses. But then in Canada, you also have the Canadian Securities Administrators, so the OSC, as our primary regulator, overseeing this as well. In the US, you just have the lending licenses, so you don't have the SEC overseeing it. So it makes things considerably simpler And it allows them to move a lot quicker as well. I mean, when things are simple, things are more, companies are more innovative quicker.
What do you think we would have to see, or what would like a catalyst be to incentivize the Canadian regulators to play catch up with the US and kind of push forwards to incentivize people to start building in Canada?
Probably a pro crypto. I mean, it has to come from the top, right?
Yeah.
So that pro crypto government or a leader, a champion that's very high up that sees the benefit of people got very excited about blockchain. People are very excited about AI, but it's like if we just see things through, maybe we can have longevity in blockchain and then longevity in AI as industries. So it's really to have a champion up at the very top that consistently push this forward, because that's how it all trickles down.
Agreed, 100%.
Are there any conversations around regulation changing for privacy coins? So things like Monero, XMR, right, Zcash. Currently, those are illegal to trade and to lend. Is there any ongoing conversation in that world?
Not to my knowledge, but my knowledge is limited. So
shame.
Yeah, no, I not the privacy coins specifically. Yeah, not that I know of. Other cryptocurrencies, yes. Privacy coins, I would know.
Still illegal?
Still illegal. We first which one?
So you saw a couple weeks ago, Australia recently adjusted its AML guidelines to start viewing real estate professionals, accountants, and lawyers and administrating them under the AML CFA guidelines, because the Commonwealth Bank was found to issue about $1 billion of loan using fake AI generated financial statements, documents, and payroll stubs. How are the regulators viewing some of the emerging risks with AI and the fraud vectors that could impact borrower?
I mean, I haven't heard much on any amendments or new initiatives on AML relating to cryptocurrency. I mean, I don't know how long ago it was they clarified that if your money services business, if you're in the crypto lending or trading business, and so you've got to do your monthly reporting, subject to FinTrack, KYC requirements. But other than that, it's not my specialty, so it's not to say that it isn't happening, but I'm not.
You're much closer. Sorry, you had a question.
Oh wait, well, I've got colleagues in the room. Are they aware of anything? Oh, okay. Not just me.
My questions are on the recognition of stablecoins and just crypto as assets, because I know the Crypto Clarity Act in the US is trying to make any sort of crypto investments more legitimate. Are there any plans for the Regulatory Board of Canada to start recognizing people that are holding 6-7 figure amounts in crypto as legitimate assets that you can then put into, let's say, the top 5 banks and start, using that as collateral for loans or for asset purchases without too much scrutiny?
Well, you can do that now.
Not easy though.
Apex. Just log in. We'll make it easy.
There's definitely pushback though.
So, I mean, there's no regulations yet on the new Stablecoin Act. I know it's a bit of regulatory hot potato on, because they've got sort of Bank Act oversight of stable coins, and the act is going to legitimize effectively stable coins in Canada is the goal. So, you got the rules about how they're backed up 1-to-1 and audited and blah, blah, blah. But then what's really unclear, I don't know if this is answering your question at all, but what's really unclear is how do securities laws intersect? There's no guidance at all. Who's really going to be regulating stablecoins other than in connection with their creation? So I think it's a bit of a gray area still.
I think from our perspective, the reality is the banking industry in Canada is still very, very so, I wouldn't say anti-crypto, but just staying away from crypto. Which is interesting because we see regulators actually becoming more open to working, on innovative crypto projects, but the banks are still very much so apprehensive. So I can't say that from, and we talk with a lot of, financial institutions and banks. They're probably still waiting on more clarity and can't say that it's a warm discussion. It's more ambivalent. Which again, compared to what's happening in the US, like we talk with the US, banking partners and financial institutions, is a whole different story.
Just overall, it's we see it as an innovation problem. Right? Like it's not necessarily like all of these things follow innovation, and how much pressure there is on innovation, how much funding there is for innovation, how much sort of and in Canada, unfortunately, the mandate has always been innovate, go to Silicon Valley, innovate, go to Silicon Valley, because that's where the money is. So it's we have just not invested in the right resources to foster this environment of innovation, and unless you have that, there isn't much pressure on the status quo to change, and that's what we're seeing here time and again. Like your example of Binance, your example of Canadian companies that have actually innovated and made it big, we can count on like these 10 fingers. In the US, I could keep going for 5 minutes and still not like off the top of my, and that's just off the top of my head. So that's and like that's what we see permeate through like regulation, through government, through VCs, where there's just the appetite is just not there across the board, unfortunately.
Yeah, and I mean, just it's a little bit off track, but just to add to that, even if we look at us, most of the funding that we got as a company came from American investors or offshore investors. It wasn't Canadian investors, and so it's just the stark reality of building a business in Canada. It's a small market. It's a relatively small market with high regulatory costs and relatively little compared to the US, support from financial support from sort of VCs and government. But nevertheless, persevere. We keep building because we believe in we believe in this country. We believe in the opportunities that we have with us, and there's still great markets. We might not be the biggest market, but we have a solid market. We have amazing clients, amazing partners, and even the regulators we like. On that note, I think that wraps up our panel. How long is our break, Ria?
10 minutes.
I have a question if you don't mind.
Sure.
You guys have worked so hard on the regulatory and the crypto side to get your licenses and have the custodianship and have all of that in line. Have you seen friction on the fiat side of moving the Canadian dollars around and getting that to customers? I know that a lot of people, specifically consumers in the crypto industry, get their banks shut down, their accounts shut down for sending money to crypto exchanges and things like that. Have you experienced friction on that side of the functionality?
I think that's a great question. At the beginning, there was a couple of questions that our clients had come through to them from their banking institutions, but no, not as of late. I think, knowing how they work, I think it's just that our name now has permeated, so people like the But the banks, the financial institutions, they know Apex. So when they see, funds move around from Apex to clients, like they understand where we are now, like, so there's no sort of surprise factor anymore. So no, not as of, for a very long time now. But at the beginning, absolutely.
Excellent, because a lot of people in that space would have, like I said, large crypto holdings and not much funds in their traditional bank accounts. And then to see a 7-figure amount come in with no history, it could raise some questions.
Again, which is why we went the regulated route, because that gives us that stamp of approval. When we talk, when we respond, we're able to reference our listing on the SC website, the CSA website. So we're listed there as one of the approved.
And you're finding that the banks are being respectful of that or recognizing that and helping you with the actual transaction flows.
Yeah, we have phenomenally fast funding. I think our record to date of signing up, applying, sending collateral, and us sending a wire is something like 2 hours and 30 minutes from beginning to end. So it's very, very fast. Yeah, it's very, very fast. Yeah, we haven't been able to beat that record yet, but that's pretty impressive. All right, so 10 minutes, and then we'll continue with our fireside chat with Jarrod, JB, and Fraser. And there's some drinks, non-alcoholic drinks. Some juices and coffee and water. There's washrooms in the back as well. Yeah, thank you so much. have been requested to ask everybody in the back rows, specifically the very back row. No, I'm joking. Just everybody, please move closer up, if you wouldn't mind. If you wouldn't mind moving closer up, that would be very appreciated. Thank you. That way you can hear me better. Good? Wonderful. Thank you. All right. I hope everybody had a good break. I want to welcome you back to the second part of our Toronto Tech Week event. My name is Andrei Poliakov. For those of you that are new in the room, I am the CEO and founder of Apex Lending. We are the first regulated crypto-backed lender in Canada. We are co-hosting this event together with DLA Piper, and we're very thankful for our partners at DLA Piper for organizing this event with us. A team that I've worked with for almost a decade, building now the second regulated business that I worked on. Previously, we took Coinberry, which was the first regulated crypto trading platform in Canada, through the process. And not so recently, I guess last year at this point in time flies, Apex Lending as well. Apex Lending is a regulated crypto-backed lending platform where Canadians can borrow against their Bitcoin and Ethereum and get either Canadian dollars or USDC as their proceeds of loan. And today I am very, very happy to welcome with me on stage three, Jarrod, I guess you already were on stage with me. Exactly.
He's
less happy. But very happy to welcome Jamie Leverton, who is the CEO of Reserve One, previously the CEO of HUD 8, and Fraser Matthews, who is the CEO of Netcoins and BIGG. And of course, Jarrod Isfeld as well, the partner at DLA Piper that I have worked with very closely over the years. We are going to be discussing the sort of expanded topic of trust and crypto and lending, and not just from the vantage point of Apex as a regulated entity, but also from the capital markets perspective of Reserve One, and from a regulated CTP perspective of Netcoins. CTP obviously is a crypto trading platform. I realize we use acronyms so often that we forget what they mean. So very excited to be here and have this chat with you. As in the panel, if you wouldn't mind holding your questions to the end, that would be very appreciated. But of course, at the end, we welcome all questions and we'll do our best to answer them. So I want to talk a little bit about, and some of the questions that were posed to me during the break is use cases. Why do people borrow against their crypto? Now, we can all, when we were launching the business, there was a lot of hypotheses. And funny enough, one of the requests of the commission when we were going through the regulator process was to poll and ask our users. I did.
Okay.
Oh, well, when I give you the mics, you can intro you. Or would you like to intro yourselves now? There's a second mic, by the way. Do we have the second mic?
Right.
Okay, perfect. Well.
You're good. Keep going.
Yeah. All right. Okay. So, where was I? No. So there was a lot of hypotheses about why clients would want to use, their crypto, and so during the onboarding process with Apex, we ask our clients why, what are the use of proceeds of your crypto loan, and we were very, very actually surprised to find out, and with time, it became a really a source of pride for us as a business, and I'll explain why. Because we realized that the vast majority of the use of proceeds is actually for real life uses, whether it's buying properties, starting a business, expanding a business, buying land. We've had people take out loans to pay for their kids' education. And of course, some people take out loans, to buy more crypto as a leverage tool. But it's a far distant, I think, fourth in that list. And so, we've had really really amazing use cases where people have reached out and said, thank you for providing this service. I was able to, instead of selling my Bitcoin, I was able to take out a loan against it and, pay for my kids' education or start a charity. We recently had somebody start a charity. It's really, really amazing use cases. So very, very heartwarming, but also surprising. I'll be very honest. I was, initially I was quite surprised. So the question that I have for each one of you is, do you feel from your vantage point that crypto-backed loans and credit are still a niche product that is, specifically catering to the crypto crowd, or is this becoming more of an expanded use case? And is the industry really, or at least this segment of the industry, really growing to become something sort of mass market at this point in time? And I'll give you my card. There you go. And please do introduce yourselves in more detail.
Oh, no need. I'm Jamie. I have been in this space since 2017. Took over Hut 8 in 2020. I sit on a number of boards between the traditional data center space and the digital asset space. When I was running Hut, we were kind of on the leading edge of a couple of things, including this subject. We were the first of the publicly traded Bitcoin miners back in early 21 to say we were no longer going to sell our Bitcoin. We were believers that over time, keeping Bitcoin on balance sheet would serve us better than keeping fiat on balance sheet, just because of erosion of purchasing power. And so we started hodling. And over time, we built up a very lovely stack of Bitcoin, but we still needed to fund ongoing operations. And we were looking for non-dilutive ways to do that. And we entered into a lending arrangement, the first of its kind, with Coinbase in late 21, early 22. And to your point, we entered into that lending arrangement for a few reasons. They were a regulated counterparty, which is important. Counterparty risk, especially as a public company fiduciary, is critical in your decision-making process. It was an elegant solution. It was low friction. We were already using them for custody. And what we wanted to access fiat for was to buy a traditional data center business. That's when we announced our purchase of TerraGo's data center business, as well as to reinvest in some increase in operational capacity of the mining side of the business. And now that is commonplace. Almost all of the large publicly traded Bitcoin miners use Bitcoin lending facilities to some degree. So to answer your question in a very long way, I think it is just a tool in the toolkit now. It is no longer niche, and I think more and more people in the mainstream economy are looking at ways to protect the melting iceberg that is fiat, and taking exposure to crypto that they can still use for other things is more and more interesting for everybody.
Amazing, thank you. And Fraser, what's your perspective?
Yeah, we see a number of different use cases flowing through our retail trading platform, which is Netcoins, where we see users who are long-term holders that didn't want a liquidation event. They didn't want to be getting into a taxable event either. So keeping Bitcoin holdings or Ethereum holdings and utilizing them to get cash for, everyday spend, right? Whether, like you said, college, university tuition, auto loans, home loans, etc. They're using that as spending power, kind of in this new modern economy where they're on-ramped and prefer to stay there in many cases. Further, that corporations, many digital asset treasury companies who are coming to us and utilizing holdings that they've acquired and said, we need additional capitalization. This is going to help to fuel our growth. It's a new way to collateralize. And for some younger companies as well, you don't have as much opportunity to collateralize certain things, right? You're a younger company, you only have a couple of years of financial operation. Owning this asset allows you to get access to financial markets they may not have had before, particularly if you're operating in the crypto space.
And somebody earlier on asked about how the regulators look at margin trading. So I'm curious, from your perspective, do you see a lot of demand for margin trading on the platform? Is that something that you see gaining traction, or again, is it more real life use cases?
So margin trading is always commonly asked for. It's unfortunate that's not permitted and available in Canada, not just from margin from taking a loan to buy more, but just in general. We're in many regards held back from additional trading types here in Canada, right? So we don't have perpetuals, we don't have derivatives, we don't have access to margin. It unfortunately pushes people to go offshore and do things elsewhere. And that's been one of the big challenges here in Canada, is that Canadians can operate within the registered crypto trading platforms that we have here. And we spend a lot of time, a lot of effort, a lot of capital to be registered. But other products and services can still service Canadians offshore. So we find that a challenge. It's something our clients ask for, and we know all the other exchanges we're all openly pushing for with the regulators. And hopefully we can expand what we're permitted to do once we're all CIRO members.
Right, and I echo that. I think the reality of the crypto industry is that it is global, and there are platforms globally that still service Canadians. So I think a message that we've shared with the regulators quite often is it's one thing to regulate and provide frameworks for companies to get regulated. That's another thing to actually enforce and create value out of that regulated status, because otherwise, if somebody can just, an offshore company can offer the same business with half of the regulatory costs, then, what is it all really for, right?
Can I ask Jarrod a question?
No.
We actually used to have quite a forward-thinking regulatory regime. I mean, Bitcoin miners went public first in Canada. First ETFs are in Canada. What changed?
Well, I think part of it, like back in 2017, they were just getting familiar with what is cryptocurrency. Is it a security? Is it not? Some are, some aren't. And they're trying to figure out, do we need a new regulatory regime, or can we go the US route and just take the position that it falls within existing securities laws, and if somebody's offside, will enforce. But they went another route. And they said, look, rather than go sort of regulation by enforcement route that they did in the US, we're going to do something better. We're going to create bespoke rules around which, crypto businesses can operate. And the trouble with that is it took a long time, and there's a lot of input. And I guess the point being that they sort of took this approach where we're going to take jurisdiction over this. And then we have the ups and downs of the crypto market, right? We have 2022. And instead of them getting more and more comfortable and creating sort of broader, clearer, permanent rules, they took a step back and said, oh, we really need to be careful here. And they continued on that original route of, we got to look at each crypto business. We've got to, create bespoke exemptive relief, and all of that takes time, and it's very, very slow. I think now, though, there's a lot. They've taken jurisdiction. They understand now they're moving too slowly. They understand that if your mandate is to protect Canadian investors and Canadian, it's nice. We create a nice, safe environment that Canadian companies can operate under. But if Canadian investors can go offshore, who cares? Where's the protection, right? And we're seeing that. So I think they're recognizing that, and I think they are going to start to move more quickly, and we're going to have more permanent, broader sets of rules, whether that's through blanket relief, guidance, maybe even some rulemaking. And a good example is the new tokenization project that the CSA is undertaking. I mean, I'm hopeful that that's the direction it's going in, but not yet.
So the answer is it's Sam's fault.
Yeah. Yes.
Yeah.
Yes.
Okay.
Yes.
Just so everyone's clear.
100%. Yeah.
Sam Bankman-Fried broke Canada.
2022 was they kind of shut down, because what was there? There was Celsius, there was Lunaterra, and
Voyager.
Voyager. The launch pad, right?
Pilot Zoo.
Where we're going to take fintech and accelerate it. That kind of shut down then.
Sorry.
No.
Very Canadian of me.
Anybody else have questions for Jarrod?
And an apology.
All right. So my next question is actually to you, Jamie. So from an institutional perspective, what are some of the sort of due diligence elements? And you alluded to that, with previous work with Coinbase. But what are some of the due diligence elements that you look at when looking for a counterparty to utilize for a crypto-backed sort of credit facility? Is it the contract structure? Is it the collateral? Is it the custody? Is it is it the terms of the agreement? So can you just walk us through some of that institutional perspective on what you
I thought you were making it multiple choice. It's all of those things. I think when you're making a decision as a public company fiduciary, you're making it on behalf of all of the stakeholders, and obviously everything you do is public and disclosed. And everybody has an opinion, and they're not afraid to share it with me on Twitter or any other platform of their choosing. So you have to make sure that you've got the right counterparty, you have the right structure. I think, as I mentioned, the Coinbase solution was elegant because they were also our custodian. So we didn't have to worry about being woken up in the middle of the night to move crypto around if there were big price swings. We were able to do that automatically within their structure. It was early days. There also wasn't a lot of choice. We were able to negotiate what was a competitive rate at that time, and at a time when it was really difficult for Bitcoin miners to get non-dilutive sources of financing that were in any way competitive. That certainly evolved since then. The other thing, I think, if you are using these facilities a lot and there's a lot of dollars involved, which increasingly is the case in the institutional world, you need more than one counterparty. I think you're expected to diversify your risk, diversify your counterparties, and so back in 2021, there weren't many regulated counterparties. It was really hard to diversify and not sacrifice some of the other things that were important. But today, I mean, welcome to the market. Thank you for joining. We have more trusted counterparties. We have more choice. It's gotten more competitive, and that's very, very good for the borrower.
So you guys are here first, reserve one to borrow the Okay. So that actually leads me into my second question, which is now due diligence on the retail side, and it's a question to Jarrod, to you as a lawyer. In an age when, and we see this happen, people take our loan agreement and they throw it into ChatGPT and they say, flag all of the things that are not in my favor, and then we have to go and throw into my ChatGPT and say respond to each one of these. And this is it's a ChatGPT to ChatGPT negotiation. No, but jokes aside, in an age where people do that, they do take legal contracts and agreements and they run them through AI, and they get feedback, and then they push back, and sometimes they understand what they're pushing back on, sometimes they don't. And what would you recommend to somebody running a family office or providing legal services to high net worth individuals on the retail side, but perhaps even on the institutional side, to look out for in the contracts themselves when they work with a lending facility?
So I'm acting for the borrower.
You are acting for
the borrower. So then I want to make sure that I want to look at how ownership of the collateral is laid out in the agreement. I want it structured as a pledge of collateral rather than a trust type relationship. I want to make sure I maintain legal title while the assets are custodied. I want to make sure that the custodian is qualified. I want to make sure that there's extreme clarity around margin notices, liquidation, and the liquidation process. I want to make sure that there is time for my client to remedy, to add more collateral or pay back part of the loan. I want to make sure that the lender doesn't have too much it doesn't have any discretion over my collateral other than in connection with liquidation or an event of default. I want to make sure the events of defaults are limited. I want to make sure there's clarity on fees. You know, can my client, you know, repay the loan early? Is there a penalty involved? Is there a minimum period of interest? And can they get in and out quick if they need to? What else? I think those are the key ones. I want to look at jurisdiction, right? I mean, if I can, you know, if we can go to a Canadian court, that's much better than going to, you know, having to go to a small island. And, you know, not really pertinent to the agreement itself, but I want to know if this entity is regulated, because if I do have issues, that's another lever I can pull.
Thank you. I wanna just expand a little bit on.
One last thing: segregation. I want to make sure that they're clearly segregating those assets at the custodian level, and that there's a lot. You know, there's not a bunch of time spent in hot wallets, and it's all cold wallet segregated.
Right. Yes, that is very important. I wanted to go a little bit deeper into the first point you made about pledge. Can you just maybe expand on that for the audience? Why is that important? Why is the ownership important, and how that plays into any potential, you know, hot water scenarios that people need to be aware of?
Okay, so this is a time when I make clear that this is not legal advice. Plus, this is not really my area, but as I understand it, like, what you're worried about if you are the borrower is if the platform goes under. You know, does any creditor of the platform have an argument that they have rights to those pledged security, that pledged crypto, the crypto assets? And so, if as a borrower, it's very clear that I maintain legal title, and that I'm not transferring my legal title, then I don't really have to worry about that as a borrower. Now, from an institutional lender perspective, if a lender is coming in and, you know, lending to APX to provide the cash it needs to disperse loans, I am concerned that if a borrower has, you know, they have their own debt, they've got a general security agreement with a big bank that precedes their relationship with APX, that while APX is holding that collateral, they could get a notice from the creditor of that borrower saying that, look, you know, this is part of the suite of assets we have security over, hand them over. And so to protect against that, we have, you know, we have sort of ranked registration. Whoever gets their registration of the security first wins. But there are exceptions to that with things like cash, where if you hold or control, you as a lender, it doesn't matter that the borrower's creditor has a prior registered GSA. You get to keep it. And there's a lack of clarity in how these laws work in Canada provincially. So we're not 100% sure all of the time, based on the particular cryptocurrency, where it's going to fall. Do you have a perfected security over that collateral by virtue of the fact that you control it? How do you control it? How does that control sort of translate into the applicable, you know, provincial legislation? I've got a colleague who's an expert on this. I've been trying not to make eye contact with. Did I get that right?
You're doing great.
Okay, thanks.
All right.
The thing I might add is just the hypothecation used to be a big issue. You're talking about keeping money in cold wallets.
Yeah, exactly.
That's kind of the same issue, but that got people into trouble in recent memory. So that's a big
big concern.
And so what rehypothecation is basically if I as a lending platform, you borrow pledge collateral, I take that collateral and I lend it out, or I borrow against it. Sorry, I borrow against it myself against the actual collateral. Right? That's the definition. Or you lend it out, and so that's something that used to happen in the past, which led to the explosions the implosions that we saw. With FTX and Celsius and something that is very, very strongly forbidden by the regulators, and any remotely decently safe platform will stay as far away from that as possible. So whoever you use for your crypto-backed credit services, I welcome you to use Apex, but whoever you use, make sure that your collateral is not rehypothecated. It's a massive, massive risk. All right, PSA. So that's a question to the group, and private credit is a massive, massive asset class. Crypto-backed, credit in comparison is still relatively tiny. Are we sort of overstating where we are right now in the grand scheme of things, or do you guys really see from you're all veterans in this industry? Do you really see this as sort of the next big thing? The first was trading. Now that people have access to crypto, now this new wave of sort of growth within the industry is now, okay, what do you do with that crypto? How do you leverage against it? How do you make it work for you? And again, in comparison to sort of private credit, and what do we need to do as an industry to really grow further? And again, in comparison to private credit, grow into those big shoes. So Fraser, I'll start with you, and then I'd love to hear from the rest of the panel as well.
Yeah, on the corporate side, it's going to be proper structuring and really taking a conservative approach to structuring new products. Using leverage to build, and that capitalization comes with its own risks. And inherently with crypto assets, we see large value fluctuations, right? Price swings. And that's really what creates a lot of a challenge around it, is that, a Bitcoin can go from 77,000 US to 120,000 down to 63,000, right? And that's in a 120-day period. Structured products in traditional financial services aren't moving with that level of fluctuation. The collateral may have swings based on, say, like a real estate or investment or a trust, but it's backed by something else underneath it. So we're going to need to bring in more assets within the crypto industry to structure those. So whether that's stable coins or VRCAs, as they're known in Canada, we need to start to couple those together to build a bit more structure around that capital. And then we can see more leverage to build out, more leverage to capitalize new companies, more leverage to build out, new investments within the space as well. I think that's where we're going to have to see more growth. So looking at, traditional investment banking and structured products and structured finance that we'd see on Bay or Wall Street, and bring that into the crypto space.
Well, we've seen Saylor kick it off with his, I think he's up to 5 different pref structures, which the main difference between them is how he strips down the vol and what the dividend that they pay out is. And he's exactly going after the fixed income market and the private credit market, using his treasure trove of, I think he's up to 830,000 BTC on balance sheet, none of which does he actually have loans against.
I got nothing to add on this.
I can talk a bit more about the retail side too, where innovation is coming into this space as well, because we have a number of people that are, the hodlers, people long-term into Bitcoin, people who don't want to sell. But Bitcoiners need liquidity. You can't just continuously take cash, move it on chain, buy, and then, not operate, in our society. And we're not seeing people willing to spend their Bitcoin either to a large effect, right? We've seen it promotionally. You go to the conferences, don't spend, hold, don't spend, hold. But there's reality outside of the walls too, right? And Bitcoin hasn't become as popular for spending as other crypto assets have been. So smaller, use cases around lending, right? Think about a payday loan product or a cash advance. And some of those products we can now structure because we can see, what's available, what's on the balance. It's all on chain. It's visible to both counterparties. So taking a cash advance, a day ahead of your salary, or you've got a life event coming up, collateralizing these things, whether it's $100, $1,000, $10,000, it's going to be a lot easier to do that. And that's where blockchain and this new technology and crypto assets are going to propel new use cases, not just at the highest of corporate levels, but day to day for individuals as well.
Bitcoiners don't want to pay tax.
That's actually
It's their libertarian roots.
Yeah, and those capital gains taxes, I think there's some people still holding out that might go away for crypto, right? Particularly in the United States, they're thinking, can I ride this out as far as possible? And maybe the orange friend down south will work with the orange crew of Bitcoin to make that happen. But there are people holding out hope that maybe I can liquidate without it. We saw big liquidations 2 years ago, like everyone who was kind of seeing 120, 123 topping out, massive liquidation events. And those who have continued to hold are definitely going to hold.
Yeah.
Well, the other thing is if they die, they get reset in the States. That's not a thing that happens for Canadians, but for Americans. Yeah, if they leverage their way into the grave, then it's a new baseline that goes to the children.
That's so interesting. Just to expand and give a little bit more detail on what the discussion. So when you sell your Bitcoin, if you sell your Bitcoin at a profit, then you're paying taxes on the capital gains right on that. This is not accounting or tax advice, but usually in most cases when you borrow against your Bitcoin, you're able to obviously get that loan and you're not paying any taxes for taking that loan out. So you're getting liquidity from your Bitcoin and you're not actually paying taxes off the sale because you're not actually selling the Bitcoin when you take a loan against it. So that's sort of what we're talking about. And I didn't even know that in the US, apparently it's a lot more beneficial to, I guess if you're going to die with your Bitcoin stash, because then your cost basis of that Bitcoin, I guess for your kids, gets reset to whatever the price is, which unfortunately is not the case in Canada where we're getting taxed.
Although they have to pay inheritance tax, which we don't. So
all right, so Fraser, so you were mentioning a little bit about from the sort of retail trading perspective, and I wanted to. This pertains to lending, but I wanted to see sort of from your vantage point, where do you see clients, like what are clients asking for from trading platforms and exchanges in Canada? Is it a full service product or platform that is sort of expected and is demanded by your clients that you are, in hopefully in turn passing the message on to the regulators? Or is it still, again, a very niche sort of, I want to trade my Bitcoin here and I want to lend against my Bitcoin or borrow against my Bitcoin here, or do you see it all coming together in sort of one full service suite?
Yeah, it's a great question. I think convergence is here, and at least with what we're looking for at Netcoins, it's taking what we're seeing with financial services, your spend, save, invest, trade, pay. We need to have all of it. We need to move quickly to have all of those things. We've seen. Particularly with the kind of giants from the United States, a lot of retail crypto trading volumes down. Those who were, say, speculating within crypto have moved on to prediction markets, which have seen massive inflows of capital. We want to really focus on those who want to be on chain. So what is every service that we can give to you? You want to pay for something, you want to buy something, you want to send, receive, invest. We need to have all of that within the application. So for us, any services that are permitted in Canada that are on chain, we'll be bringing them to the platform, and then working with the regulators to bring those that we see elsewhere that are successful here to Canada as well. We think it's really important to build things here in Canada for Canadians so that we get exposure to all of the great global use cases for crypto assets. And for us, it's what we need to do to compete. I think clients are saying, I want to onboard once and do as much as possible with one service. So for us, it's a point from our strategy to go and do that.
All right. So full service, full all the way to banks, all the way. I'll answer that question from from our perspective as well. And something that we're really excited about, and we're building out the regulated credit infrastructure layer in essence at Apex. Now in Canada, we happen to utilize that same credit infrastructure layer to offer loans under our OSC and CSA exemptive reliefs. But like I mentioned, globally, we license our technology, and I think what's really exciting for me is seeing in all these discussions that we're having, and I see it happening, and is the incumbent financial institutions, the banks, the credit unions, start exploring how they can participate in this new industry and looking for technology solutions to be able to do that. And of course, lending is sort of the bread and butter of really any sort of bank or credit union. And so what I'm really excited about is more financial institutions that are not necessarily crypto native, but perhaps already exist, start offering crypto related products. And lending is something that is very natural, I think, as a next step to some of these. And so offering these products to their clients, I think, will help the entire industry, because obviously more people will be able to participate in the ecosystem. So that's sort of from my perspective what I'm really excited going forward. But I want to open with my last question to the group. And what are you most excited about? Like I mentioned, you guys are all veterans. We've all been here for the better part of the last decade. So what are you most excited about over the next 5 to 10 years that you've seen sort of evolve in the crypto industry?
That is a lifetime thinking 5 to 10 years ahead in this space. And I also can't believe I've been here almost 10. I think what we've seen in the last year, as far as who's gone public and who's been successful in a really choppy market, it's people like Figure, people that are coming out and they're solving real world problems that are more narrow than what we've been talking about for the last 5 years. We're no longer talking about tokenization of real world assets as a big generic concept. Where like what Figure did was solved a real problem around transparency of HELOCs and the underlying collateral. And they've been very successful. And I think some of the projects that I'm looking at that I'm most excited about, they're doing exactly that. They're solving real world problems and taking friction out of the system in a way that's meaningful, but isn't creating, they're not over promising on what they're trying to deliver. And then they can build from there. I think as an industry, we need to see more of that.
All right.
I'll have two. One is, I'm hopeful that we see more protection for Canadian-based crypto trading platforms and crypto platforms, generally speaking, in Canada. We got off to a great start from a regulatory perspective and from a growth perspective. With the closing of WonderFi and Robinhood this week, we're the only publicly traded crypto trading platform in Canada, and there's only 5 others that remain to this day. So hopeful that we see continued growth of the Canadian platforms and additional support to grow our industry here. I think it's very important. It can't be overlooked. And unfortunately, with M&A, it can quickly be swallowed up by global competitors. So I'm hopeful for that. And I'm hopeful as well for just a shift, generally speaking. Blockchain technology creates a lot of transparency. The myth that you do something with crypto and it's hidden and it disappears and you have no idea what happens with it is actually the complete opposite. We can track and trace just about everything except for some select privacy coins, which we can't do, Max. I'm sorry, but we can follow the flow of funds now. We can see funds on chain. We can see collateral. So when you think about all the commercial lending, the big lenders in Canada, how they used to do it, you just trusted the book was there. Run off spreadsheets, back offices with paper forms and photocopies. And there's a new era of financial services that will come through this technology. It's not just Bitcoin. It's not just USDC. There's all sorts of new tech and tokens that will come in here to help us, create a new financial services layer here. And I think Canada can really adopt that.
Yeah, it's the same with me. I'm hopeful that we'll have a more permanent, clear regulatory regime that's harmonized across Canada so that we can see more and more companies in the space be able to innovate and be able to, start up new businesses quickly with clarity as to what it is they are able to do. I also, I'm really hopeful around this new tokenization initiative at Zero and with the securities commissions in seeing whether we can layer tokenization into traditional, trading and of funds and creation of financial instruments. Go from T plus 3 days to T plus 3 seconds, and with the Stablecoin Act, utilizing stable coins to make the back end the provision of the actual dollars to buy the token also happen at T plus 3 seconds. That to me is exciting, and I think the intentions are where they need to be. It's just, do our regulatory institutions, are they set up in a manner that allows it to move quickly? That's my niggling concern.
Yeah, the regulator institutions, there's little detail. All right, before I open up the floor to questions from the audience, do you guys have any questions that you'd like to ask myself or any other of the panelists?
Yeah, I already got a question.
Yeah, okay, Jarrod. No, we're good.
Yeah.
All right, wonderful. So I'll open up the floor to questions from the audience. Does anybody have any questions? Yes.
After like those big events in 2022, what do you guys think institutions are gonna want to see or they need to see in order to bring large capital, allocate large amounts of money on chain, just like trust wise?
I think 2022 was so long ago that there's nothing.
Effects already. You think most of those?
Well, I mean, I think, look, if we take a look at what happened with block fills, right, earlier this year, that imploded, and spectacularly for a lot of the same reasons as Celsius back. The same allegations of exorbitant salaries being paid to management and things of that nature. Now, if I'm not mistaken, block fills was actually registered and regulated in one of the islands, if I'm not mistaken. So I'm going to make a point that the regulatory body that governs the business in question, it's very important that this is a regulatory body that has teeth and has a robust, strong, what's the word I'm looking for here?
Ability to shut you down.
Yeah, the ability to really shut you down, and whether that's in the U.S. or in Canada, like you gotta really think very critically about the businesses that you work with and where they're regulated, and what that regulation, whether it actually has any value. And so, I'm obviously going to make a case for Canadian, regulators here, since we are regulated by the Canadian regulators, that we have a very robust and strong brand name from that perspective. So I think that is needed for any institution to really take this seriously. But Jamie, you probably have
I think 2022, a lot of people got burned because they were not following first principles. They were not executing on trust but verify. They weren't verifying. They were doing absolutely like shite due diligence, and they got burned. But if they had have been doing the job that they were trained to do, that they were supposed to do, if they had have been doing proper diligence, pension plans wouldn't have written checks into Celsius or FTX. That was just bad diligence. So I think if anything, it taught them to like go back to first principles, do the job right, and don't get caught up in FOMO. That's really what happened. So I assume they've learned their lesson, but it wasn't so much a crypto problem as a breakdown in diligence.
Yeah, and I'd add that to that as well. The innovation cycles are getting shorter and shorter. Things are happening faster and faster. And in the crypto industry in 2002, it was still like one moon, everything's going up, everything's going this way without thinking to those first principles. In the financial services industry, like Lehman Brothers was only just 20 years ago, and the collapse of commercial mortgage-backed securities and mortgage-backed securities. And that was their version of the rehypothecation, right? Too many funds being used too many times downstream, right? So that's stretched out longer when the financial services ones took place from the 80s to the 90s, real estate to early 2000s, stock market crash to bailouts, et cetera. We were not talking about being good partners with regulators in 2002. We were talking about what car, these crazy people were buying offshore And we had to, as an industry, shake the tree and get the bad actors out. And that happens. Unfortunately, it took down a lot of good people with it and a lot of good cash and capital out of it. But this industry needed to straighten out a little bit, and it did. And, we'll see shorter and shorter cycles now where things will happen. We'll learn, we'll move forward. We're seeing that, with now it's individual companies. It's not blocks of companies. It's not the industry anymore. So that all just shows that there's like a bit of like a tightening up now in the crypto side. People want to make sure that we've got strong use cases, that we work with regulatory bodies, that we really understand the first principles of things before we go and do them. And I think that's really been an evolution of the crypto industry that's going to push it forward to work and bridge into traditional finance.
2022 was silly. People were getting like 15% yields, and they didn't understand that the risks that were being taken. They actually all pointed back in many ways to one hedge fund, and that's what caused the House of Cards collapse. Novogratz was getting Terra Luna tattoos and putting it on Twitter. Like, it was crazy. And we have not seen a resurgence of that silliness since 2022.
Yeah, I think anybody offering you, 20% yield, that's
You're the yield.
yeah, exactly. Yes, sir.
Just building up on the second part of the question, what about the 1010 crash with everybody was using a lot of leverage and then the whole like big cascading effect? That's pretty recent too, right?
Yeah. It was retail, it was offshore, it was a ton of leverage. It was I'm oversimplifying, but it was essentially a system error that caused a rapid unwind.
That's what you say.
Well, that's as much as we know. And then people didn't realize that they had this automatic unwind set up. A lot of retail traders didn't understand, and that cascade happened, within 12 hours. It kicked off and was done before most people woke up. Which happens with new products and with leverage. To one of the conversations we had earlier, what the Canadian regulators are really trying to protect from is stuff like that. They don't like these over leveraged trades that they don't understand, that aren't transparent. There were a lot of casualties in 1010 that didn't deserve to be casualties, for sure. And we saw some good actors come out of it. I mean, Binance obviously involved, but they paid a lot of clients back very quickly, which we didn't see that happen at all in 2022.
Fair enough.
A question about like the quote for Bitcoin when you're looking at your leverage. There's no regulated quote out there, but there is a lot of ETFs and a lot of work done on saying this is the quote we refer to or whatever. How do you feel that's evolving? It's not like New York Stock Exchange lists a quote for around the world.
Right. So I can talk to how we do it at Apex. So we look at a number of regulated CTPs and the price for Bitcoin at those CTPs, and then we average out to get a quote for Bitcoin that's representative of the market, and also the reason we look at a number of quotes is so that obviously you remove outliers or any failures in any one platform. Now we build really phenomenal technology, and where's Taha? Is he in the room? There he is. There's the gentleman that built most of it. But we mark to market our entire loan book on a near continuous basis. So we quote for all the loans that we have outstanding. We quote on that particular, whether let's say you have a $900,000 worth of collateral, but somebody else has $1.5 million worth of collateral. So we get quotes for every single loan that we have outstanding for the specific amount of collateral on a near continuous basis, 24/7. And so we're able to ascertain the health of your loan, the loan to value ratio of how much we lend you versus the value of your collateral near continuously. And so that allows us to have a very strong understanding on the health of our entire loan book. And so we don't have margin calls at Apex. We notify our clients when their collateral reaches over 80% in loan to value. So the more your collateral drops, the higher your loan to value ratio. So once you cross 80%, we start notifying our clients periodically, but we don't actually liquidate collateral until 90%, which is very, very high up in the market. I think we're perhaps the only ones out there right now that liquidate at such a high LTV. So we give a lot of room to our clients to just monitor the market. Now, eventually, if you don't want us to liquidate, you should probably top up, send more collateral, pay back some of your loan. But we give a lot of room to our clients. So back in the dip that we had in February when the markets crashed, a lot of our clients, the vast majority of our clients, were not impacted because of that extra room, and we're able to do that because of the technology that we build that continuously. I think it's every 15 or 20 seconds, that continuously gets a quote and marks to market. So we know exactly what anybody's loan health is at any given point in time.
And from a trading perspective, there are rules for crypto trading platforms around liquidity providers, checking those prices, and then you have to have a non-LP price that you can also use to check your pricing against it. So pricing fairness is overseen by CIRO and by the provincial regulators as well.
And that's what's important. We work with regulated entities like Netcoins and third party, whether it's qualified custodians that are regulated in their own jurisdictions. But when you borrow against or borrow from a regulated entity, you're also getting the benefit of all of these third party partners that we are mandated to work with that are regulated. So it's not, you get a whole sort of the whole ecosystem that you benefit from is regulated entities that all answer to all regulators and are all playing above board with all of their proper policies and procedures and mitigating factors and developed and implemented.
Hold on. You think an official regulated quote would help the industry? Or do you just think?
Well,
we don't trust a single source of anything.
Yeah, I think you need a number of oracles, but also, it's like the price of gold, right? The price of gold varies depending on what exchange you're sourcing from. The price of gold in the UK is different from the price of gold in New York. So Bitcoin is much like that, I believe. So it's a free market, right? So you can't really have a regulated, that would go against the ethos.
Look on the security size of your national best bidder offer, right? It's a lot easier to manage. But then you got DEXs and stuff like that. And so I'm curious, could I challenge Andrei on, hey, you liquidated me at a price that I could have gotten else, you possibly could have gotten elsewhere at a better price that would have come into my favor. So I don't know, maybe.
No, because he's had the disclosures.
Exactly.
Right. It's part of the loan agreement.
Yeah.
It says that the price will be as determined.
Exactly. One really interesting point that people don't really think about is when you take out a loan backed by Bitcoin, what you're in essence doing is you're buying a floor function. Because let's say you have $100,000 worth of Bitcoin. So you can take out a loan up to 60% with us, right? So we'll give you $60,000 of loan. Now, you know that if Bitcoin goes up, great. You can pull out your collateral, you can get more loan, that Bitcoin's yours. If that Bitcoin drops to, we liquidated 90%, so it drops to 66,000, right? We'll liquidate your position, we'll return back what we owe. So that means as soon as you've taken that loan, you've at least got the 60,000, right? Even if Bitcoin drops to 40,000 afterwards, 30, 50, whatever, you already have that $60,000. So it's almost like I don't want to use the word security in the security law sense. It's a hedge. It's a hedge from that perspective. So you're paying an interest on that hedge, but at least you'll whatever Bitcoin you have, you already have the 60,000, right? So people don't really think about it that way quite often, but
Regulators certainly don't.
Yes.
This is more for Fraser. I'd like to get your perspective. I know you come from banking in the past. Innovation is not an issue here. Regulation is not an issue. How do you drive mass adoption? Lots of use cases. How do you drive mass adoption in a smaller market like Canada? And how far back are the banks in basically either partnering or acquiring into that retail space?
It's a great question. I think in Canada, it's such a conservative market. We're not seeing people paying for things with crypto. We're not seeing merchants accept payments through crypto. So we don't have that whole other side that we're seeing in other parts of the world right now. We've seen it as something that you might invest in, buy and sell, and maybe move. But we haven't gotten to that next part yet, right? So The normalization of things is really important. Stable coins offer the ability now to say, okay, this is not going to move, hopefully, shouldn't be moving, but I can now see why I can accept a payment in this. With Bitcoin, if I, buy a chocolate bar and Bitcoin's at $2 and all of a sudden it's at $1, the merchant's lost, right? We can't have that if we're going to do it. So stablecoin and adoption here and usage will be really important. I think that's going to be part of that normalization. And, it's, no offense to the Bitcoin crowd, and Ron can't shove me in a locker after, but explaining what a Satoshi is and why it's named after Satoshi and who's Satoshi, and the normalization of that around common conversations with people who aren't in tune with crypto just throws them right off. It's like, I'm not going to buy that. I'm not going to spend with that. I don't. That's not for me. So stable coins, number one, getting that adoption, that'll help to normalize usage of crypto assets and spending. I think on the banking side and, seeing them start playing it, that's probably where they'll start to get started, which is how to create some closed loops here, how to do use cases that are safe and secure. Maybe it's just settlement, maybe it's bank-to-bank settlement, maybe it's inter-department settlements. Moving just stores of value around will be really important to kind of get things going and some confidence there. We've got the tools in place. We've got things that help you out with on-chain forensics, investigations. We've seen a lot of normalization around that as well. And I think banks and financial services institutions and credit unions are noticing this and saying, yeah, you know what, we're getting more and more safe and secure around this. And I think that will give people confidence to say this isn't, some crazy thing that we can't wrap our arms around it. Now you can, right? So the technology's there, the adoption can be there, the use case, the funding's there. So it's just bringing it all together and just kind of normalizing this in the system, I think, is really what's going to bring it next.
The American banks are light years ahead of the Canadian banks, even though, their talking heads may have been singing a different tune. What they were doing internally was completely the opposite.
Yeah.
And therefore they're here. Canadian banks aren't here. They haven't been secretly building like the US banks were. They've really been doing nothing. And so they are miles and miles and miles behind. The TD is probably the most advanced. They actually have a digital assets group. It's based in New York. They are putting their balance sheet to work, which I'm not aware of is happening at any of the other Canadian banks. So TD is kind of the first. They're having global conversations. So maybe we'll see something from them before the rest. And at least they're here now. They're in the conversation. They're starting to do the work. But as always, Canadian banks are laggards and they are not interested in introducing innovation. They like their fat fees and they like their opaqueness.
I see the credit unions being the first into the marketplace. And once they establish themselves, then the banks will start going, hey, I'm missing out. And then they'll do the FOMO and they'll get involved and all that. But they're so conservative that they won't touch it until it's a proven entity.
Actually, I'm seeing queries from credit unions in Western Canada.
Yep. So they were the first ones into the cannabis market, doing cannabis lending, and all that kind of stuff.
Maybe not the poster child.
Well,
I agree. BMO and private banking was doing lending to cannabis founders on private banking side. Nobody else wanted to touch it.
Yeah,
I agree with you.
It got frothy.
From a banking perspective, everybody calls TD.
Yeah.
There's good reason for that as well. There was a credit union out in BC, CCEC, that pioneered lending towards and banking towards the cannabis industry and the early crypto industry. And they very quickly realized that they weren't capable of doing the EDD that they needed, and they got burned on both ends and they completely backtracked.
Yeah, Alterna is one of the big ones in the cannabis market.
Well, here in Canada, we just see ATB, right? It's ATB. As far as bank, credit unions have opened their doors to crypto trading platforms. It's been a primary source of funding, wires, EFTs, and they've been great partners. We haven't seen the big five be great partners, right? They haven't opened their doors. They have closed groups that work internally, but they haven't quite said, you know what, we're willing to do a test case with you, or our compliance team will review all your wires and say yes or no. That's fine. that is the way forward. But until they're willing to kind of just test and learn and work closely, they'll lose out on the businesses. We'll work with the partners that want to work with us.
We were with a Canadian bank for years at Hut, and I swear the only reason they kept us on is they thought we were a hard rock miner. And we never corrected them. We managed to stay banked.
I have a question regarding how we test. So from the regulator standpoint and your fund standpoint internally, historically as well as now, do you think anywhere in the world it is considered as a part of the due diligence, how we test, whether the issuing token it would be considered as a security? Is that a concern for you guys or the regulators?
It is, yes. So crypto asset statements, crypto asset reviews is a mandatory part of any asset to be added to a crypto trading platform. So how we test and the Pacific Coast test are the two things that you have to do to prove that it's not security. And then following that, additional due diligence is required. We have to do, I'd say there are about 50 or 60 pages of digital asset review. That's our scrutiny and review of an asset before we can list it. So there's a number that we just, frankly can't do based on the structure of it, what's underlying it, and what it may be.
Now, what's really interesting on the lending side, we have a little bit more, I guess, freedom because we're not trading and the security, we're just accepting it as collateral. So I think it's something that we'll be exploring further with the regulators in short order, because obviously being able to lend against, whether it's tokenized real world assets or other security classes is exciting as the next step.
So it is mandatory from regulator side also, it is only an internal check?
Mandatory from regulators.
Across globally?
Not globally. That's why you see startup tokens don't occur here in Canada just simply because you can't on the centralized exchanges. So that's why you see it happening more offshore DeFi.
Oh, thank you.
A platform question for Andrei. You were saying that you will lend in Canadian dollars and stablecoins. Which stablecoins do you lend?
USDC.
And is that loan still pegged to Canadian dollars, or is that so it's the crypto that they've lent against USDC?
Yeah, it's against the USD dollar. Yeah.
Okay, so there's no fluctuation against the interesting. Is Canadian stablecoin something that you guys are looking more into? I haven't been following it lately, but I know like QCAD used to be a thing and it seems to have dropped off. I believe Netcoins used to offer QCAD.
Yeah, there's three right now that are working, right? So QCAD, CIDC, Loon are all working to get listed. We've seen QCAD have permission now to be listed based on its registration. So it's not just the exchanges and the lenders; it's also the value referenced crypto assets, as they're known in Canada, that also have to register. Securities regulators in Canada still look at it as you're buying something that you need a prospectus for. So what underpins this crypto asset? So even for the stables, it's what's underneath it. Will this change in value? Who manages it? Who controls it? So as they go through their registrations, it's not just that side too. They also have to have minimum capital requirements and their full prospectus to be reviewed, approved, audited to then be listed. So there's three that are kind of fighting here in Canada, for prominence, and ultimately, we'll see who wins.
Yeah, I think an interesting data point I can share is so we do offer both Canadian dollar and USDC loans, but because our use cases again are real life use cases, the vast majority of demand we see on the platform is Canadian dollar loans. So I think as sort of these digital Canadian dollar stable coins start getting traction, you'll be curious to see what the demand on that is from the loan side, because obviously for us being able to send a loan and process payments, whether it's interest income payments or whatnot, almost instantaneously on chain is obviously a great benefit over sending a wire.
And that's something we discussed last year. I believe you offer lower rates for USDC. Was that previously a thing?
We offer the same rates now across both currencies. Yeah, it's the same.
Previously it was different, and
it could have been, yeah.
It's a big deal with it because I was looking at borrowing, perhaps taking the lower rate in USDC, but my use case would be I just have to convert it to Canadian dollars.
Right.
So why not let you guys do that?
Exactly. And I mean, we have different capital pools for Canadian dollars and for USDC. So it's like we even convert in the back. It's just different credit facilities. To that point, you're talking about rates. I mean, we have lowered our rates in general. I need to plug our rates here. So we go down as low as 9.99% on our loans, and you can take out a loan between 20 and 60% loan to value on origination, between 3 months and 5 years in length.
And on that note, I gotta go.
On that note, I want to thank everybody for coming out. I want to thank my panelists here. And it's been a pleasure. Thank you so much for dropping by and sharing your perspectives. And thank you to our wonderful team and Ria at Apex for organizing this event. Thank you for the DLA team for hosting us, and their wonderful marketing teams for supporting. And thank you to all of you, and thank you to Toronto Tech Week for helping promote this event as well. And we hope to have many more in the future. So we'll make sure to let you know, and we'll be hanging around here if you have any questions as well.
Thanks, guys.
Yeah.